Good morning. Welcome to the Breakfast Show, Trading Ideas with SMARTRobie. I'm your host, Martin Wong. As the case of COVID-19 continue to increases, we can see there is still a lot of work need to be done on our market. That's right, on our KLSE market. And also yesterday, we have the big sell-off because of the Chinese regulator Tdax stock crackdown, and where we saw the Hang Seng fell by 4%. And this morning there's just a quick rebound, and also when the market opened last night at the US Dow Jones, it is also taking a cue from the big sell-off that we saw in Hang Seng, but the US market eventually has recovered a bit. Let's take a look at what we have for you in our breakfast store for you. Definitely in our trading idea today, it's Wednesday, the 28th of July. We'll be looking at the intermediate level. That's right. Of course, don't forget our continued collaboration with Rakuten Trade. Do open up an account with them and stand a chance to win a 50 ringgit brokerage voucher. That's right. Now, today is Wednesday. We'll be looking couple of things, also the news sentiment as well as the trending stocks list that we have for you, and also review last week trade idea and see how well they fare. And of course, this morning, where is our market with our Bursa headline and what we have seen so far? This market seems to be pretty interesting. Okay, now that's another issue. Okay, we'll come back to this one here. So let's look at the sentiment that we have this morning. That's right. Let's look at our KLCI sentiment. Wow, we look at this one here. And this morning, the sentiment is telling us, okay, let me just backtrack to the trending stocks here. Seems to be in a little... Okay, we have a good list of trending stock: SL West, CY Park, HSTP. So those are probably good opportunity right now for you to look into it. And let's look at our news headline we have for you this morning before we come back and look at the KLCI, shall we? Okay, first thing is this new. Let's switch over to a wider chart in here. And one of the things that we're talking about was the COVID cases. That's right. Now, with the continued COVID cases that we have, and this has been causing the recovery of the market seems to be lower. And what's basically people are saying right now, we have no choice but to wait for the overall vaccination to roll out. So you can see from here, and this is the latest update from the Edge, telling us that like it or not, what we've seen so far this far, right, the number of fully vaccinated, 2 dosage, including myself. I have 2 dosage yesterday, and it is around 17.5%. Of course, the Prime Minister of Malaysia did mention all fully vaccinated by October. So that will be a continued drive in here. So far we have seen in here is the cases of the vaccination in here continue to go up. And also, hopefully, our COVID cases would come down. But what's more important from the context of the stock market, the analysts from this research house does have a few counters, calling the defensive counter being Tenaga, Magnum, Axis REITs, Allianz, Freight Holding, and for growth stock is GARB, Genting. Genting is a growth stock. Oh, okay. And Genting is a travel stock, okay? GCB, Inari, and Mr. DIY. Interesting to see. Let's take a look at Mr. DIY, okay? So we just type in Mr. DIY here, Mr. DIY, okay? So in here, Mr. DIY, looking at stock chart, stock comment, you would know what we have here. DIY continue to slide on. It's just that a lot of good news currently still comes out, but I think the market probably have seen its heyday. It's not going to go lower because there's still a lot of institutional support from Mr. DIY, but I don't think this is what you want to call it, a growth stock. It is a matured stock. Having said that, okay, a matured stock, you're not going to make too much. Let's look at the fundamentals upon it. Okay, the fundamentals, wow, look at that, it's only rated 1. With a PE of 47 time, ROE of 34, hardly pay any dividend in here, but that's pretty much tells you where we are, okay, for Mr. DIY. Is it a good stock to buy? I leave it up to you if you like it or not, but definitely always check the hot sectors if you are wanting to trend up with those stocks, buy along with the trend. Definitely Inari is one of them, which we will talk about in our trade idea today. All right, let's look into let's look at our market right now, and let's see if the Robie chart is back here. All right, so you can see this morning the market is holding up very nicely. Yesterday we are up 2 points, but what's more important, switching to a wider chart here, is what we call an attempt to break out. We have the upthrust. The market came back and still well supported, and we have a test yesterday. So that's a sign of strength, meaning the market will be tested. Of course, if the market were to break below the test, the low of this test, that means we will still have some significant downside in here. So right now it does look like the market's going to pretty much move sideways. Nothing really interested in here, and I'm not too sure with the number of cases that we continue to see higher whether this thing will break lower or not, and that seems to be the showstopper that we have on the KLCI. All right, definitely looking into another story that we have in here, switching to a wider chart, is VS Tech, used to known as another computer seller, but they're moving into enterprise. The good news is they are usually a good dividend player. So VStack, let's take a look at VStack in here, switching to a wider chart. Okay, you can see VStack switching here. So VStack seems to be in a sideways market with the resistance. Okay, let me just pinch it up a bit here so you can see, and just moving it, you can see you have around 280 is the old high. No doubt it's a green pentagon. Having said that, so this does tell you it is probably a good area to sort of buy and pull back, but take note of the old high that you have in here. It may not going to break new high, definitely for sure, because this is more on the software side of things, but it does pay a pretty decent dividend. Let's take a look at what kind of dividend they are paying. Looking at the here, the chart here, click on the fundamentals, and you can see up here it does pay 2.68%. It has a 5 rating. I think that's pretty good. It's a good stocks to hold for longer term. All right, on that basis. Okay, let's move on to our next story. So our next story is on IGB REITs. Now this report, I believe, may be in a bit biased, talking about shopping mall and talking about recovery. This seems to be in next year, so it's maybe time to look into it. So the research house in here talk about the Mid Valley Mega Mall continue to remain unchanged. It's one of the best retailer in the KLCT. Having said that, but it has its challenges because of the footfall has dropped significantly. So the same report also talk about that once the vaccination, that's why I've talked about the vaccination in the earlier context, that you can see as long as our vaccination continue to move higher, eventually at one point our KLCI will turn green pentagon, right, and the market will move back up. So that's something that's what we are looking at, and this is the scenario that we in here. So the research house has given some sort of target price at 195, 165, and 170. Let's look at where the market is for VStack. Okay, I can't get the keyboard down. Yes, okay, there you go. So that is IGB. Okay, IGB REITs. Okay, let's switch to IGB REITs here and switching to a wider chart. So you can see IGB REITs on the stock chart itself, right? It's really not going anywhere much too, all right? And you can see here, it's my phone, that the keyboard is blocking. So here you can see it's holding up at this level, about 168. Let's take a look at the dividend. Okay, so dividend is paying 3.99%. So 3.99%, not too bad, a 4% in here. Those who like property, I don't like property, as I said before. I prefer the exits REITs. That's one on the commercial and warehouse. I think going forward, the COVID cases is just not going to go. We all heard about the Delta variant and so much that people are very afraid of going out and contracting the Delta variant, and even talk about those who is fully vaccinated can pass the Delta variant to another person. Those are news that I heard here today, but yet to be confirmed more from the CDC side. Okay, let's go on to our next news that we have here. Right, so our next news is on LCT Chemical. LCT, Titan, a Lotte Chemical, a Korean into that, and the research house DA Research noted the spread on the second quarter averaging between $284 and right now it's $351. So that tells you the spread will definitely give them a so-called gain in terms of their sales and profit margin in here. So as such, they're still having a hold on LC Titan. Let's look at LC Titan here. Okay, hit that one. Stock chart, stock comment. So you can see LC Titan has a very nice chart setup. Usually I like this kind of setup here, and it's because if you look at here, right, you can see from the chart wise you have a nice green pentagon. Of course, a green pentagon was here. Okay, a green pentagon was here, then it lifted up, and then you have the upthrust. I do think today the market should be higher. Let's take a look at the stock price this morning. All right, the charts looks pretty good. Okay, and you can see it's up 1.4%. Of course, the target price is 304. Where is it now? I haven't checked it yet. It's it's almost there. You know, it's a 280 something, right? And it's 304 with the target price. So hopefully this stock can go a bit higher. Again, it's not one of those hot sectors. It's definitely in the industrial sectors in here. Okay, let's look at the next chart that we have, or next story that we have, is the rubber glove player. Now, rubber glove player has done pretty well. It falls high for Kossan in here, reporting the net profit has surged in here and announcing a second interim dividend for 12 cents in here, increased to 1 billion. So if you look at the chart wise here, you can see the stocks, right? You can see up here continue to head higher. But what is more significant is the tapering. So what they are saying in here, if you look at the second quarter of 2021 in here, you have the net profit at 1064. So this net profit has sort of tapered off, and a lot of people are looking for margin expansion, as I talk about in here. But definitely from this case, they're looking at quarterly jump. But no doubt, if you look at Supermax, let's look at Supermax chart in here. It has fallen a fair bit in here, and to me this is a value stocks. Okay, definitely value stocks. Foreign funds are not coming in here to get much of this kind of stocks, and that's why the stocks cannot go higher. If you look at it, it has turned green pentagon, but again, any old high, you can see rubber glove go through a lot of profit taking. But the way I see it is that in Malaysia, many of the retail investors are holding these stocks. Institutional just have minimum. If the institutional buy most of it is already out, whoever holding it is the retailer. Now, having said that, retailer are the last of the investor that is in, right? So what does that tell you? In order for the stocks to go higher, you need to have more people buying it. And if the retailer being the last in it already, how is the stock going to be going higher? There's no one buying after the retailer. Then this is the real reason why we don't see Kossan going high. Finally, to have this stock really moving up, we need to see institutional and foreign fund buying. If you don't get this, it's not going to go any higher. So take note of it. It's going to go up a bit, rebound back, and not that much of excitement with the COVID-19, and of course with the continued shutdown of some of these factory, plus also the workers' condition continuing to weigh down on a lot of these rubber glove stocks. So that is the opinion that I have on this kind of stock, why it couldn't go higher. Now let's look at another story moving on to the US market here. So far what we have seen right now is US market has turned a little bit of profit taking as usual. As I said before, this is the nature of the market, because every time when you see new high, we get that. So yesterday Tesla reported the earnings in here, and we quickly see a rebound back after around 3 o'clock in the morning, and Hang Seng sell-off that causes it at the opening at 9:30 last night. That's where the market. So Tesla again, good news, sell first. Apple, good news, also sell. So the market is actually down slightly in here. All right, so that's the US market. If you look at the US market for what we have in here, this is the point that we have. This is AMD. Okay, I'm going to switch over to S&P 500. And S&P 500 continue to go up, you can see in here, but again on lower profit. We need the market to go higher on higher volume, but not too excessive. Okay, that means the rally is sustainable. So this is still healthy, trend is still up. At one point you will undergo a bit of profit taking, which is fine. And if you look at last night, what we have seen, we have the Apple down $2, 1.5% in here. AMD is down minus 0.86%. The Alibaba were the Chinese stock, and they were affected by the Hang Seng sell-off. That's what we see, almost a 3% sell-off of $5 in here for Alibaba. Okay, so that's the take. And this morning we will still wait how would Hang Seng react, whether the Chinese crackdown is still continuing or not while the market is happening right now. Now let's take a look at our next story that we have here, right, is on Apple. Now Apple came out with the earnings last night and it crushed the earnings, okay? And however, usually, as I said before, when good result comes out, stocks usually go down. This is probably due to profit taking. So let's look at US and type in Apple, AAPL. So here you can see Apple, just switch to a wider chart here, and you can see Apple has a double top, right? And this double top does tell you which is the limit, how much you'll go. It's likely to go through profit taking, so wait for the next green pentagon, or maybe buy at some sort of a better location trade setup. And that's how you want to trade it, right? Right now Apple, it's something that you should not be too aggressive buying. Remember, good news, time to sell. Take some partial profit if you want to, but this stocks I think can continue to go a bit higher from here. All right, let's look at our next story that we have for you. Is on the SGX side. On the SGX side, stocks to watch for, MM2, Korea. But one of the stocks I really like is this French E28, which is a tech stocks. And if you switch over to SGX here, E28. Okay, so E28 stock chart, stock comment in here, and this chart looks very, very promising. You can see that a new green pentagon, and that's what kind of chart we like, you know. Green pentagon. The sell-off was a nice pullback because of the widespread bar down here. And let me just show you this. Okay, so you can see this bar was also due to the Hang Seng sell-off that we can see. This morning, I think French can should be up. Let's take a look. E28 live stock price. No, it's still down 2%. I think it's still reacting to the Hang Seng and also last night's sell-off that we see in the US market in here. All right, take a look at that one. It will come back and form a nice base, right? Learn to read the support and resistance and the chart before you take on into it. Right now, the ATR stop loss hasn't been triggered. It is still continue to be an uptrend in here. A lot of the REIT stocks are doing well in the SGX side. So check out Maple Rips, Capital Land, and MM2. All right, take note about that too. Okay, let's move on to our next in our list is our leaderboard for our past trending stocks. They continue to make new highs, some of our stocks in here. Okay, so you can see last week our trade ideas that we have, JHM and MI has made a bit of high. So let's take a look at it. This morning in here, you can see JHM. So JHM has made from the date, which is the 7th of July here, and the market made up to here, which is about, let me just put it in here, which is about 9.4%. All right, that's a nice one. Remember, a lot of things are not moving. At least this one is moving. So the next one is MI. Okay, pullback, but this morning is up slightly. So those are the two stocks that is really taking a cue. At one point in time, I do take note some of these will eventually go profit taking, but again, learn to take partial profit as you go higher. Okay, next, the area that we want to talk about will be our next trade idea for this session in here, which is the 28th of July, episode 98. CY Park and Inari. Now take note that the SL West did move yesterday too. So let's take a look at the CY Park for the trade idea that we have. Yes, today a little bit of pullback here. That's a nice chart in here, right? So we're picking up because there is a move in a lot of the renewable energy. Okay, so next is our Inari, which is our tech stocks, the big heavyweight. And you can see in here we have a long period of congestion, and some of these things I will talk about it tonight. Okay, so take note of that one. So here we have the market likely to pull back, so we want to see the pullback on lower volume, and once the volume has turned back up, we'll see this market continue more. Of course, this is all going to depend and await for more news coming up from the Hang Seng as well as the US, but the trend certainly looking to push up higher. Right now, take note, the overall KLSE market continue to weight down. That's what sometimes the market could not push higher, right? And also we have the absence of foreign funds buying, so this is what we get. Now let's look at the next news that we have in here is the hot sectors. Now this is STI. Let's move over to KLCI. Shifting to SMARTRobie here. So look at the KLCI sentiment. Oh, there's no news here. Okay, never mind. So this morning seems to be there's no news. Robie did not pick up any mail, so we just skip this. And let's move on to our trade VSA's trading portfolio. So far we had 11.6% versus -7% for the KLCY. So the next question I have for you, how well your portfolio been doing? Now, if you look at the KLCI, and this is one of our latest analytic tools that we have in our Pro dashboard, a beta version. So we are releasing it out. You can check out the KLCI monthly return. So far is -7%. All right, for the entire year, you can see here -7%. And if you look back, the yearly average return is really in the negative territory. So that's what, you know, if you're really putting up a lot on the big cap shares over the last 6 years, you have a -5.88 return. So this is one of our features that we will flash every Wednesday just to update you all, and you're able to see the kind of work that we do in here for having the tools. Our Pro dashboard will put you in the right position, right place so far. Okay. So this is interesting to note. And let's move on to the hot sectors that we have this morning here. So the hot sectors is technology, healthcare, REITs, and utilities. All right, check out on that one too. So there you go. And again, this is something I will cover more tonight. And one of the stocks that exhibit this is SL West. Take a look at this with the line change, and the market seems to be moving up in here, and I think there's some underlying behind in here. Of course, when it comes to our sign of strength, sign of weakness, check out our tutorial in here. And of course, don't forget our August intake is registration is available in here, and we'll be looking at the US and the KLSE market with our 5 coaching in here, with our longer term mentoring and coaching, helping you to improve your portfolio. Remember, our portfolio is up 11%. How well have your portfolio been doing, and do you need more attention to improve your portfolio? Check us out, okay? And don't forget, tonight, do join us at 9:30 as I will share with you how to select stock that is ready to move higher with Pentagon Guider. All right, take note of that one in here. And don't forget, this coming weekend will be our English one-day trade VSA course. So take note. And right now, we'll come to our session for the stock chart review. And of course, we'll be given priority to our stock fans and also our top fans from Facebook in here. And for those of you who think that we have done a good job, do go over to Google Play Store and Apple Play Store to give us a review so we can continue to upgrade our services for you. Thank you very much and for your appreciation in here. So let's take a look at some of the stock chart that we want me to look at. All right, we already got some of you coming in already. And let's take a look at the others. All right, we have first one, just going to bring up my chart here, is RCE. RCE Capital, I assume. Now, RCE Capital has broken below the ATR stop loss. Okay, again, this is due to the very high level in here. So if you broke through, need to exit. All right, you need to exit. All right, take note of that. Yep, you need to exit. You can see that, right? And we adjusted for dividend. Also same thing. Here the earnings is coming up. Not that difficult. D&O has a pullback in here. Right now, most stocks will do. Trend is still up. Good one here. And we have Sembawang Marine. That will be on Singapore. So okay, Sam Marine, Samcorp Marine. You see, even on the trading view, it's very different too. So I have to put Sam Marine. I need to get the right code. So if I can't, I'll just go over to SMARTRobie. SMARTRobie has a better way for the code system here. SEM, I think it's S51. S51, yeah, Sembcorp Marine. Oh, this one not so good. Okay, this one, very simple. If you have it, you are already very similar to Server Dynamics. Okay, that's our Malaysian share. If not, you have to wait for the green pentagon in here, right? This stock definitely is not something you want to be holding on to. There are a lot more better stocks for this one here. Okay, any more stocks you want me to look at, just pencil those in. I'll be happy to look into them for you. Okay, we have ATA INS. Okay, green pentagon, low base, nice setup here. This is the one I like. You can see market is picking up, and so we will talk more about this tonight. Okay, nice chart here. Lee SK. Oh, this one really nice up. Time to take a bit of profit because you have the old resistance here. Okay, you can see take out of the upthrust. You have a lot of this low volume low volume accumulation. Then the volume came in. So right now, I think it's time to take profit. Remember, earning date is here. Okay, Tdax. Tdax, it's okay because it went through a big wash here. Right, wash out, and this one needs a bit more time for it to move higher. Okay, JHM, I think I reviewed that earlier on, but we can take a look at it. This is still a nice trend up, right? Keep it. The takeout of the upthrust is going to be important in here, but remember, you still got this overhead resistance at 262, so you'll see a lot of fighting from that standpoint. Okay, we have QES. QES didn't break through ATR stop loss, but right now it's ready to move sideways, and this is where your ATR stop. Once that thing break, it's likely to continue downtrend, or what we see a more prominent sideways moving in here. Okay, so take note of that one. Use the SMARTRobie, right, that you have here. You're able to see this. Okay, use the stock chart and stock comment that you see on SMARTRobie. CTOS is nothing much to look at because CTOS is just listed. All right, so you need to look at the charts set up here. Okay, there's only 1 or 2 bars, so it can't tell you anything. We need at least 6 months or 3 months of data to see smart movement, price, volume, whether there's any institutional support, smart money support, or even retailer. So right now, usually the case that you get here, the market is likely just going to move sideways. All right, from here onwards, we have JAX. Okay, JAX is also okay. You have green pentagon in here, a lot of recovery, similar to SLOS. Okay, so don't panic if you don't know how to read the chart. Learn how to read the chart. This is your ATR stop loss. All right, take note of that one. So right now it's still okay. And again, on the backdrop of our KLCI weaker, we tend to see many of this very big one. Okay, we got UWC. That will be our last stock review that we have, and we'll definitely, UWC is fine because there have been technology in here, right? Continue to go up on a wall of worry. Okay, so thank you for coming, everybody. Thanks for your time in here, and of course, do subscribe to our YouTube for all our live FB tutorials and snippet of good investing education in here, and don't forget to join our Trade VSA trading idea and also our continued collaboration with Rakuten Trade. Right. So thank you for coming in here, and do spread the good words around of our Telegram chat room, and I will definitely see you tonight for our live FB in here. Thank you for your time, and bye bye.